Good morning. How is everyone? How are you? I hope you are doing okay. I am doing okay. As we said, this year, we will be doing it differently. So we will be live trading daily. And I accept that sometimes being in the markets daily is a bit exhausting. But remember, this field is not for everyone. So as much as we are complaining that we don't want to be in the markets daily, we have to keep abreast, or we have to understand what is happening in the markets every day. Okay? And understanding what is happening in the markets every day does not mean that we take trades every day. No. What this simply means is that we as traders are caring enough about our finances or about our future to an extent that we as traders are able to go back into the markets and look at how the markets are behaving, not necessarily taking any trades, but being aware and understanding that the market gives us information on a daily basis. And if the market is giving us direction on a daily basis, or it's giving us information on a daily basis, our work is to get into the markets, understand what is happening in the markets, and then take trades in regards to the occurrences of the markets. So welcome once again. This is the Trading Cyborg, and we are about to start our analysis for Wednesday, date 11. So share this live with any person you would wish. Tell them to join us. So today I want us to start from the DXY. So if you are hearing me right now and you can hear my voice and you can understand what I am saying, give me a thumbs up. How many are we here? How many are we? Alright, how many are we on? Alright, so I just needed at least 3 people. We have 2 on YouTube and 2 on Facebook, which is all what we need right now. So we can start. So can everyone see what I have put there? That is the monthly time frame for DXY. Monthly time frame for DXY. So we can see that DXY is breaking, has broken, or is breaking right now this low which was held from 2012 up to 2026. That is around 8 years, no, 10 years, no, 14 years. So 14 years times 12, so DXY is currently breaking the lows of, is breaking, at least it's breaking 128 month lows, 168 month lows, or 14-year lows, or a 14-year trend line. Okay, now our work as traders is to find opportunities based on that specific trend line. So DXY is currently breaking the lows of, breaking 128 month lows. So 168 month trend lines, or 14 years trend line. So this, for a good trend line, it has to have 3 touches. So the first touch was in 2012, the next touch was in 2022. Now we have this other touch in 2026, which is breaking this level. Now what is the confirmation? You can see that in May 2021, price formed a very strong bullish OB to indicate that we are continuing with the trend. So when we break this trend line, we are expecting that price is going to move from 96 and the first step will be 89. Okay, so the first drop will be at 89. So what does this mean for our other pairs like GBP USD, USD Chef, USD CAD, USD what? So let us look at GBP USD. Currently on GBP USD, we are also looking to buy. Why? First, price broke through or closed above this very serious monthly OB here, which would have been a perfect sell. But instead, what did the price do? Price closed above, and when it closed above, my friends, that was an indicator that indeed we are going up, because that is called a price change. So the other anticipation is that now we are going to close above this monthly OB, and then our first target will be here. So around 472 pips. So that is the monthly time frame on GBP USD. Okay? And that means that whatever capital you have, whatever money you have to protect it enough so that you can get these opportunities, because these are very serious opportunities. All right, let's drop to the 1 week time frame. Now in the 1 week, we have something very, very interesting also here. We are having something very interesting here in the 1 week time frame. So what is happening in the 1 week time frame is a story I want to explain to you right now. It's something I want to explain to you right now. So if you look carefully, if you look closely, okay, and I'm using the word closely, look closely. If you look closely, you'll see one thing, that we are having a weak OB here. So we are having a weak order block just here. And this is the level we had marked as the monthly OB. So what does this mean? This means one thing, that this level will be easily broken without being retested. Because if it was a strong order block, I would have worries that this level will have to be, price will have to retest this level. Can you repeat the best? I don't understand your question, Luca. So repeat your question. Frame your question in an easy way that I'm going to understand. So on GBP USD, if you are on your chart, if you look at level 1. What is this level now? 1.13742. We have an order block, and that order block has been created by 3 candles, 3 green candles. So 1, 2, 3 versus 1 major candle here, 1 big candle. So what this tells you, what this simple price action will tell you, so we zoom it like that, we get close to it like that. So what these candles will tell you is that this is an order block. However, we classify it as a weak OB, or it is not a very strong resistance area. That means price is going to close above it easily, and once it closes above that level easily, then we are assured of these pips, because these are a lot of pips. 470 pips, my friends. Alright, so that is GBP USD on the weekly time frame. So we have moved from DXY, we have gone to GBP USD monthly. So DXY monthly, GBP USD monthly. Now we are in GBP USD weekly. Now we drop to GBP USD daily. So this level is what we are calling a weak order block area. And when we have a weak order block area, it simply means one thing, that price will easily break that level and go above or go below easily. Okay, so we drop down to the daily time frame. In the daily time frame, we can see clearly that price. Can you show us gold? All right. We can see that price has already broken this level. When did it break this level? 27th January. And then it came and retested. So currently it is struggling. It is struggling at this point now. This point has a very strong OB on GBP USD. That is the daily time frame. Okay. Now, this is the point in our analysis where we ask ourselves, are we buying, are we waiting, or are we selling? Because we have to ask ourselves those three questions every time we are considering taking any trades. Are we buying, are we selling, or are we waiting? And if we ignore, my friend, if you ignore any of those, if you ignore those three questions every day, you'll pay for it dearly. Okay? Now, what is the information the chart is giving us right now? So right now we have information coming to us. What is the information? Now, yesterday, if you look keenly, let me enlarge this for you. So we first finish with GBP USD so that we can go to gold. First things first, we go easy. So we had a very serious OB here. Okay? So if price wanted to retest that very strong OB or a very strong resistance area, and our directional bias was a sell, then already this green candle which was formed yesterday, can you see this green candle here? So I'm trying to explain to you how I analyze on a day-to-day basis so that you can understand how I take my trades. So this green candle is smaller than this black candle, and this forms another weak order block. And this means that this level has a high likelihood of being broken by price. Okay? The same way, this is a weak OB, and price has an easy way, will have an easy time breaking out of this level. So those three time frames have three jobs, or have one simple job. That is the monthly, the weekly, and the daily. They have three job. They have one job. They are one job. They are single work in this industry or in this field is to give us a directional bias, or simply what we call a trend. So if you can spot a trend just by looking at these time frames, then you can drop down to the lower time frames for a refined entry. But if you cannot tell the direction just by looking at the candles or just by looking at the chart in the higher time frame, then it is better to wait. Okay? Yes. So now that is the daily time frame. From the daily time frame, we drop to the 1 hour. So what does the 1 hour tell us? What does the 1 hour tell us? So before we go to the 1 hour, let me show you something else. Now, something else I had anticipated all along is that our sweet spot would be at this level. Why or how? Because using the Fibonacci gives us possible entries and possible exits. That is how we are able to get into those trades. So Fibonacci gives us those entries, those simple but very powerful entries. Okay, so don't ask yourself, why do we have this level marked? After all, I talked about this level in all my live streams. Okay, so now we drop to the 1 hour time frame. So before you drop into the 1 hour time frame, I also want to check. I also want us to check the news today. Whether we have news. So yes, we do have news, but news is from 9:30. Is it 9:30 New York time? Yes, it's from 9:30 New York time. No, 8:30 New York time. 8:30 a.m. New York time. That is when it is 4:30 p.m. In Kenya. But 8:30 a.m. is when we have unemployment rate change, non-farm employment change, and average hour earnings. Average hour earnings change. So what is my bias on GBP USD today? Now normally I don't like to engage where I am doubting or I have doubts. Okay? As I said, a good trade is easy to spot, or a good entry is easy to spot. So if you have a lot of cash lying around, you could as well put a buy and put a very big stop loss of 165. After all, you're holding to get at least 500 pips. Okay? But if you don't have a lot of capital, you have to ensure that, and by a lot of capital I mean by from around 100,000. So if you don't have from 100,000 USD, even 100,000 is the base minimum. So if you don't have 100,000, it is important that you find a more refined entry for yourself, my friend. Okay? So on GBP USD, let me think. Let me think a bit. Now what is, because now my problem is I don't want to wait for all these pips. These are a lot, so these are around 30 pips. But I also know that waiting for all these pips is what is going to give me most profits. So let us drop to the 15-minute time frame and see whether we have a break of market structure. So some of you think now from here, from this point to this point is the Judas swing, and then we get an entry. So I'm taking my fib from there, from this low to this high. But is that high probability setup for me? I will not say it's a high probability setup. But so to me it looks like we already have our entry for GBP USD, unless we want to ignore that entry. Okay, so look closely at what I want to show you, but before that let me get in with a small lot size first. So if you take this low and you take that high, you get an instant sweet spot here. But I'm not very keen on getting in right now. So for now, I will tell you not to get in on GBP USD, because it is still meandering. It is still giving us clueless signals. So we can go to gold. So one thing about gold I want you to remember, and I want you to, I will keep on emphasizing this. Okay? One thing about gold, I want you to always remember that for gold, you cannot trade gold like any other pair. First of all, you can see these wicks. These are very tough, these are very serious wicks. Number two, right now, gold, so the problem with wicks is that wicks can easily get you to a trade, and that trade is going to reverse back into your favor. Okay, so this will easily kill your morale, and in the long run it will kill your account. So the best way to trade gold is to avoid using a stop loss. But can you stop using a stop loss? No. Can I advise you that? No. The other best way to trade gold is to only find the best of the best setups. So in this current market, you should not even be trying, even making the effort of trying. By the way, even thinking about making the effort about trying on gold, that will be very wrong. So even that thought, you should kill it. So the only time you trade gold comfortably is when gold has given you proper entry points. Because right now, I know I'm talking to a lot of people who don't have a lot of capital to waste, or they don't have capital, because we cannot say we are wasting capital, yet this business demands capital. What we can say is that we have a lot of people who are trading with money which they think is a lot, but it's not a lot. So if you're in that category, you have less than 100,000, you have to always take the best of the best of the best of the best setups, because one single trade in gold can wipe out even 3 weeks or even 1 month of profit. Ask me, I can tell you a story. Okay? So the best way to trade gold is to always ensure that you are trading the most best setups. So if a setup is you're confused, like the way I'm confused on GBP USD, yet I'm still willing to take a trade on it, for gold, don't even try that nonsense. So for gold, what you do, if the trade is not 100% confirmed, it is confirmed by you, by the market, by your father, by your mother, by your cousins, by all your extended families, by all your mentors, don't take that trade. So the only way you can get in gold right now is simple. Unless gold gives us a clear hand of breaking out of this consolidation. Look at this consolidation, my friend. Huh? So there's 1, 2. By the way, I'm also buying gold. I'm also looking at gold right now. I have to be there when we are getting to 6,000. I have to be there, my friends. So unless gold confirms, this is the move I'm waiting for. A simple, straightforward move. A simple, straightforward move. Well, initially I had 2 moves. Okay, but yes, they are both viable. That is, they can be used as a later entry point. But the main one is this one here. Can you see this? So this is the main one. I just want to see gold because it is near this first entry. So once it breaks above 50.84, and then once it breaks, you can either be there or not there. So once you are there, you can get in directly. But if you're not there, what you simply do, you wait. Because once you wait, gold will give you what you waited for. That is a safe signal. And the only thing we need in these markets is a safe signal. Okay? Now the next pair So for gold, now the other point, the other entry is this one here. Why am I looking at this entry? Because this entry is a unique entry from the Fibonacci. So it takes this high and this low. Then it gives us these very clean spots there. So if we can get price to come to this level, my friends, that is a clean entry also. Okay? But even then, I will not even risk it trying to take this move from here to here. I will not. It has to come to this level on its own first. And when it gets to this level, it has to confirm with a bullish, a strong bullish, not just a bullish, a strong bullish order block. And not just a strong bullish order block. It has to respond with a strong bullish order block either in the London session or either in the New York session. Now with that, it is going to give me confidence not only to get in, but to also hold for as many days as I can. Okay, so these days I've learned a new technique called trailing stop loss. Well, I knew about it before, but I had not actively implemented it. I had not actively implemented it in my trading. So once gold moves around maybe 100 or 200 trades, that is in 2 hours or 3 hours, what I do now, I put my stop loss at around 50 pips or even 30 pips. Okay? Once GBP USD moves around 40 pips, I put my trading stop loss at 10 pips and let the position continue running. Right? So gold, we have said gold has two plays. The number one play is either it closes above strongly, not just closing above, just close above strongly. Number two, either it gets to our Fibonacci levels. So this is a waiting game, and when you wait, price will always get to that point, and you'll make more money waiting and discarding bad trades than you will forcing trades every day. This is something very mind-boggling and very surprising about trading, that the less you work, the more you earn. So the less work you do in trading, the more you earn. Okay? So 80% of the time you are waiting, 10% of the time what are you doing? You are trading. You are getting in trades, managing trades, doing all that pertains good trade management. But before that, what do? We have to wait for that confirmation. So before we move on from gold, the only way, okay, if I was given two options, what would I do? So the first option, this is option A, this move for gold, and this is option B. For me, I will not trust this option B because first, price has not broken above. It has not broken above this level to show us that it is going up. Okay? So we are just operating using equal highs on gold. And the more you trade, the more you understand that equal highs cannot be a basis for you to, cannot be a clean basis for you to use a Fibonacci. Why? Because we have to wait for those highs to test each other. For example, these highs are now testing each other. These are equal highs testing each other. So either it is going to respond by going down or by breaking this high here. Okay? So for me, it is better for price to break above then I look for an entry, then, and if you know gold moves like a rocket. When it starts moving, it is very hard to stop it. But generally when it comes to these pairs right now, because we are currently in a very serious historical moment, so generally if you would be patient enough, you could even wait for price to close above like that. Because remember, waiting for 30 pips, because these are just 30 pips. Because remember, let me tell you, waiting for only 30 pips is better than losing those 30 pips. The pain of waiting is much worse, is much better than the pain of losing. However long you have been trading, it is better to be taken out because you never took a trade or you waited, than losing because you got in a bad trade. Number 2, we are looking at more than, not just, more than 400 pips on gold. If you know gold, if you know GBP USD, 400 pips is a lot of pips. Okay? On gold, we are looking at more than, let's go back to gold. So this means we have to be alert always from now until that period when price breaks that level. For gold, we are looking at more than, my god. So once price breaks that level, we are looking at 9,190 pips. Okay? So that is what we are looking at on gold right now. 9,190 pips. So the first thing and the only best thing we can do right now, because as I said, my style in the markets is I don't like games. I don't like these games. These are games the market is playing on us. These are games. These are money games the market is playing on us. Just circling around here, circling around, just tempting us. Sometimes you hit those temptations and you lose. But it is money you have lost for nothing. Doing nothing and for nothing. So why lose your money for nothing? Yet you could just wait and then the market is going to give you what you want. Easy. So for gold, what I want you to do is set your alert. So once you set your alert on gold at 50.84, .559. So now if price breaks that level on gold, now we shall have the confidence we need to do what? To continue higher. Because at the current level it is, we don't know whether it is going to go down, whether it's going to go up, whether it wants to be pampered, whether it wants... Hey, there are a lot of things we don't know. And we don't want to guess. So the next pair is USDT. So are we together up to that point? How many people are watching me on Facebook? On Facebook? On Facebook? How many people are watching me on Facebook? Alright, so now we are on USDT. One thing about USDT I told you is that USDT follows price action very well. Okay? So for USDT, the act of USDT moving slowly is not that USDT will not finally move. Or it is not that USDT will not give you the... By the way, let me set this alert. Let me set this buy limit on USDT, because I am foreseeing that price... You know, we might talk here, then I'm going to forget. So that is my ideal setup for USDT. My ideal. So when USDT begins dropping, people will start saying that we are in a downtrend. But we are not in a downtrend. USDT is just coming to retest. These are what we call mitigation areas. Okay? They were once very serious highs, but now they have just been reduced to mitigation zones. So what's a mitigation zone? A mitigation zone, such like these ones here, are areas where price broke. After price broke, then price will later come and mitigate those areas, or it will come and console or comfort those areas. That is what is called mitigating. They are called mitigation blocks. So they were very serious order blocks long ago, but now they are called mitigation blocks. So price has the ability to come back to this level very easily. So in fact, let me show you. In fact, because now we are talking about the daily time frame. No, this is the 4-hour time frame. In fact, if this is what I want to see now. So if I would see this on US30, trust me, and mind you, look at the time frame. Look at the time frame. Look at the time frame. What's the time frame? The time frame is 4-hour time frame. This is a 4-hour time frame, so it's not just a simple time frame. So once price breaks this level, my ideal long-term entry for a buy will be at 49,500. Now if it does not do that, okay, if it does not do that, we will get better entries as we move forward. But still, this is a very good level. We might even get entries during the New York session. So it's all a matter of getting good entries and then riding those entries while adding your buy stops. No, your trailing stops, stop loss. It's a very good thing if you know how to use it. Okay? So this is just one scenario. This scenario I've told you here is just the best scenario. Okay? The best case scenario. Because as you know, trading, price will always do what price wants to do. Whether we like it or we don't like it, price will do what price wants to do. Okay? So our work is to react based on what price action wants to do. Now the other scenario, although I don't like it, is, well, I don't like it because to me this is the best place. We come and mitigate this level, then after mitigating that level, we feel this very big void. Look at this void here. Can you see this void? Let me draw it well. This is a very big void. But some of you will say, oh Daniel, you are projecting your own market analysis to the market, so now you should not do that. But you know, price will always do what price wants, and it is not bad to wish for me to get the best entry. So what we have there is a fair value gap. So from level 49,200 to level 49,800. So to level 49,800. So between level 49,200 and level 49,800, we have level 49,500. So level 49,500 is the ideal level for an entry because there is a fair value gap. Price will have wicked into these mitigation blocks. We'll also have a sweet spot zone at this level. So this level is ideally the best level. Okay? And also it will be a way to remove some traders, because once some traders see that you've broken this level and then you also break this level, in their minds, in their myopic minds, they will be thinking that this is a long-term sale. But is that the case? No. So what will they do? They will add more trades. Once this level is broken, they will add more trades, thinking that the market will come to these levels. So this will be a very good Judas swing. So we said a Judas swing is a fake move. Hey, by the way, this level will be reached. The way I know US 30, don't joke, my friends. Don't joke. So whatever day it's going to be reached, my buy limit will be there. Even if it is reached at night, my buy limit is there. Even if it is reached, so buy limit. So my buy limit is at 49,500. So I have set my buy limit at 49,500. So, dear listener, if price does not get to 49,500, just know that I did not get into that trade. Unless we get another entry as the days go by. As the days go by. So now we have done analysis on 4 pairs right now. We have done analysis on gold. We have done analysis on GBP USD. We have done analysis on GBP USD. So if you're on these live sessions long enough, you will realize that most of my work is always planning around the market. What will I? There are sometimes I'll get into I'll take trades. Okay, I'll take trades, but most of the time we are planning ahead, or planning what we are going to do in case price does this, and that is the best way I found to remain in the game. Okay, not engaging the markets foolishly or unnecessarily. So up that point, do we have anyone with a question? Because only a question will give us the joy we need. So the reason I'm keeping quiet is because I am happy. I wanted to take a trade on GBP USD. I don't know, man. I don't know. There's something very off about this setup. You see, for me a good setup, let me show you. Let me show you a good setup for me. So for me a good setup is like this one here. On Monday. On Monday we had a very good setup. But not during the London session. During the New York session. So price broke above these highs on Monday. And as it was breaking above these highs, it created, can you all see my screen clearly? So when it was breaking above, it created this OB here. And this OB was later retested during New York session. So that was an easy textbook trade. The other easy and textbook trade is when we have clear price action. For example, if price is able to get to this level and then give us an entry to retest, then at least we can get in confidently. Okay? So I don't like being in markets where I have to start guessing, where I have to start thinking about, oh my, what am I going to do? How am I going to do it? Okay? So I don't like thinking so much about those things. So it's either the trade is very easy or not easy at all to take advantage of. So for GBP USD, however much I want to get in right now, I'm not getting very convinced to go in. Okay, so what is your bias on GBP USD or gold or any other pair? So for Euro USD, so we have GBP USD, then we have Euro dollar, then you have pound dollar. So this is Euro dollar. So for Euro dollar, I wanted Euro dollar I wanted Euro dollar to come to this level. Imagine. It is always better to anticipate for the worst and take appropriate measures. As I've said, the pain of getting into a bad trade is worse than the pain of missing out. So ladies and gentlemen, this was my analysis. We don't know whether it's going to get to that level because how can we know? How will we know? How will we know? We cannot know. So we don't know whether price we don't know the price is going to get this level. Okay? So we cannot assume. So I'm still keeping this level as an option that price can get to that level, and it is the safest level. So 1.8200. Is that too much to ask for price? Is that too much to ask for price? It is not. I refuse. It is not. But if it does not get to that level, because well, it's a very big level also. 103. No. It's a very low area. So let me take the low. So I've taken the low of Monday and the current high of Tuesday. Because lows and highs are serious areas in price. So I have taken the low of Monday, Tuesday, Wednesday. So let me mark this using my circle. So that low, and then we have that low, this low here. Now, can you all see that high? Can you all see those highs? So those highs from Monday, Tuesday, Wednesday, they are being just they are retesting each other day in, day out. So Monday's high was retested on Tuesday. Tuesday's high was retested on Wednesday. So it will be a very good thing if price just came back to this level. And remember, mind you, when we go to the daily time frame, so when we go to the daily time frame, first of all, let's start from the one because we have to attack this thing from all angles. All angles of logic. Those are called all angles of logic. So simple logic will tell you one thing. That on Monday, despite Monday being so how do I explain this now in a way that you are going to understand me? How do I explain this to the three of you that you're going to understand me? All right. So on Monday, so normally, let us start from that point now. So normally, this is the way I want my price to form. So on Monday, we have a small a low. That is, if you are going to buy, I want price to form something like this. So Monday's low, then Tuesday's low is going to take out Monday's low. Then Tuesday's low will be the real low. Or maybe Wednesday. Then we are going to do what? We are going to buy. Okay? For example, in our case, Monday formed a low on 2nd February. Retested that same low on Tuesday, retested that same low on Thursday. Then on Friday, that low was taken out. And Friday created a new low for itself. Okay? But when you come to our week, this week on Monday, we find that price just started buying without even forming even a small Judah swing. Why? Why? Hmm? Why? Why would it do that? But that is not a problem, because even if price began buying on Monday energetically without giving us proper entries, okay, we can still wait for something called retracement. So we have Wednesday, we have Thursday, we have Friday. So I'm not sure what an untrending Tuesday means, or a low volatility Tuesday means, because yesterday was very low volatility. Or it's because we had this long range day. Okay, so I'm not sure what this low volatility day meant, but what I know is that based on our daily time frame, so based on our daily time frame, it is very easy for price to retrace to this level. Do you think it is easy? It is. It is possible. It is not easy, but it is possible. Let us use that vocabulary. It is not easy, but it is possible. So today, my work is just going to be setting buy limits. So I want to set another alert. So I have I'm going to set another alert on my phone. So I'm setting a buy limit on Euro USD at 18500. Okay, so from today I've decided I'm going to be taking only the best trades. So we better take only 5 trades that month, but those trades will be the best trades. We better take 10 trades that month, but out of those 10 trades, we have won 9 trades. Okay? Because remember, apart from using our capital, our financial capital, we are also using our mental capital. We are also using our mental capital. And if you use your mental capital and you're not getting rewarded for using your mental capital, the return on investment is not very high for what you have invested, that is your mental capital, then you need to check yourself. Okay? What do I want to check? I want to check hmm I want to check something called forex sentiment. So when you look at the forex sentiment, it has very funny. So on GBP USD, 52% of traders are short, 48% of traders are long. And you know, when you're using the forex sentiment, one thing you want to keep in mind is that this is the retail trading, not the banks. And whatever direction retail is going, you have to always go the opposite direction. Okay? So it is so 74% of traders are short Euro USD, while 26% of traders are long. Well, I'm also long on this pair. But if the market is moving slowly, we cannot try to get in that trade at all. So we better keep off and avoid fighting people who are trying to go long. Let them go long. So do you have anyone with a question? So I would rather get a proper entry, and that entry I think it's going to be coming during the New York session. So for that, I would wish to end my live session right now. Let's meet during the New York session at 4 p.m. or 8:30 a.m. London session, and yours truly we continue. We will continue from where we have stopped. So thank you for your time, and I hope you enjoyed that trade breakdown. si ndio? Mi sijui ni aje nifanye hivyo. Ata jamaa anasema that man had a small business